My pleasure to welcome you all for our today's CPE seminar program, class by class analysis of union budget for direct and indirect tax. It's my immense pleasure to welcome TG Suresh sir to occupy the dais. I request all to please rise for our CA motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्वैत 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 एतद्वैत.
Please be seated. It's my pleasure to introduce CTG Suresh sir. Is a chartered accountant, CMA and a company secretary. He is also a leading faculty in Chennai in domestic taxation and international taxation, financial management, cost accounting for close to 30 years. He has been a pioneer and role model for thousands of students pursuing these chartered accountant professional courses. And he is achievement as a winner of a national award from Capital Foundation Society New Delhi from the Union Law Minister, has produced many rank orders in CA, CMA and CA exams. He has produced many chartered accountant, CA, CMA and CS. He presented and published a lot of books and contributed a lot of seminars in a business organization. And he has given opinion of wide-ranging issue in domestic and international taxation to various corporate clients. He has interviewed many CA, CMA on a technical life for facing them at various positions in a accounting and financial level on behalf of our client. And it's my pleasure to welcome sir to be today's topic. And I request Malcolm Joseph sir to present memento to our speaker. I request Ganesh Prabhu sir to occupy the dais. It's my pleasure to introduce CA Ganesh Prabhu Balakumar sir. He is a chartered accountant in practice. He is a partner in CRBS and Associate LLP. Is a partner specialized in GST and indirect tax for more than a decade and heading the compliance, advisory and litigation practice. As a counsel has presented client in various cases before custom, excise, service tax appellate tribunal, sales tax appellate tribunal, commissioners and other adjudicating authorities of GST, custom and indirect taxes. He has been a resource person in GST and indirect taxes and in the ICT Academy. He presented paper in GST indirect taxes on various branches of ICAI and in various business organizations. As a member of GST study group of ICAI, contribute to the development of background material on GST law, handbook on annual return and technical guide on GST audit developed by GST and Indirect Tax Committee of ICAI. Is a member of Governing Council and he was the immediate president of International Chamber of GST Professional and Association dedicated exclusively on GST and indirect tax. He won the first prize in All India 5th quiz competition for ICAI student conducted by the ICAI. It's our pleasure to welcome you, sir. I request Selva Ganesh sir to present memento to the speaker. And for required information, we are conducting a CPE program, that workshop on labor law, on 15th February in Hotel Savira, Mylapore, and one day workshop on arbitration on 22nd Feb at Westin Park, Egmore, and trust renewal practical session on 25th February at CPR Convention Center, Halvarpeta. This is for current information, and I request sir to take over the session.
A very warm welcome to all the members. It's been a proud privilege to be here amongst all, maybe on the third day of the budget, post proposals that have been made, to discuss more on the indirect tax front. In fact, over the last few budgets, one question often we used to face is, what are you going to speak in budget? Because majority of the GST related amendments is any case part and parcel of the various GST council meeting, maybe effect giving changer, or how it is going to get implemented, where they are going to tinker. All that alone we need to look back to the fine print and appreciate and understand about all these proposals. Like my learned mentor TG Suresh sir, I don't have much of amendments in my hand. He often used to say the law is simple. I still believe GST is simple. Let me make my upfront point here. I believe GST is simple. I still believe it's a good and simple tax, and pursuing its practice associated with it. Now, from the indirect tax front, I'm sure all of us would have had the opportunity to just glance through the bill. Maybe some of us would have had a very detailed analysis in connection with the GST law. On the customs front, we have about 5 important changes, at least all that I can able to consolidate over here is coming up amongst 5 changes. One, in terms of some time limit that are discussed on provisional assessment. 2, in terms of a new section is getting inserted in terms of voluntary payment. Now, customs law is there from time immemorial. What is suddenly to introduce now? When we get into that particular section, I have some 1 or 2 practical insights that we are coming across on the newer challenges that are coming up on account of implementation of GST and its associated challenges. So they introduce something called as voluntary payment and its associated changes in connection with refund of tax, or the consideration for time limit in connection with refund under customs law. And then they are going to say a very good they are going to set a very good golden handshake to the settlement commission. So they are bringing up something called as interim board and those related amendments and the changes in the customs tariff act on all those rate changes. Coming back here, I have made up my mind. I'm not getting into too technical details in terms of changes in the rate of tax, products, all that, though I have fairly touched up something on that. When it coming back to the provisional assessment, Section 18 is already there in connection with provisional assessment under customs. Generally, provisional assessment, often I used to say that provisional assessment is meant only for CA final student. With due respect, I read under central excise provisional assessment, I read under service tax law provisional assessment. On my last 15 years of practice, more effectively at least 12 years of practice on excise and service tax law, not even a single day the officer accepted my proposals in connection with provisional assessment. With due respect, even now we have provisional assessment. It doesn't mean we don't have. We have section 60 of the CGST Act where we can provisionally assess the goods or services. When we go make a application before, Ganesh, you arrive a value and pay tax. No sir, my problem is I have garlic paste, I have honey, but unfortunately here we come up somebody will come up called as honey ginger garlic paste. I don't know how many of you all experienced all this. Okay, the new age kid want all this. The new age kid don't want a normal parota, they want a coffee parota. So something like this, there is something called as a honey ginger garlic paste. Now, I'm sure by the time you will gauge me where I'm going to end. My problem here now is going to be the rate of tax. What is going to be my rate of tax? And now there comes up something very big before me. If I'm going to have a brand name, non-brand name, prior to July 2021, post to July 2021, all my legal metrological act come and stand before me. What is going to be my quantity, composition? I still remember there used to be a day somebody who taught me excise will say 9 ml shampoo will be sold in India. And somebody who can go back to that vintage period and recollect it, shampoos used to be less than 10 ml. There is no big magic behind that and all. For 1 rupee you can give only 9 ml, 5 ml, 7 ml. No. Never the shampoos company was not like that. If you make it as 10 ml, it will be liable to excise duty. The moment it becomes excisable, then, now why I'm drawing all these challenges over here is provisional assessment was always there. Here we have, in customs, we are introducing a new section, section 18A for the first time to discuss something about, under section 18 there is a insertion of a provision, section 18(1)(b), which will come out and say, set time limit in connection with provisional assessment. Very interesting to note, when it comes to provisional assessment under customs, 95% they will ensure the valuation principles which are given under the customs law is always complied with and the product is valued. However, on account of, let's for a moment, way back in 2010, if somebody says the watch and the handheld phone will talk, everybody will look at him and laugh at him. Now today, every watch is talking with its handheld phone. Yes or no? Now, where should I classify it? Do I need to classify it as a watch? Do I need to classify it as a data processing device? Or do I need to classify along with my mobile phone? Now, these are some of the challenges which came. Now, internationally we classify like this, so you classify in this way. There are certain points assessed in that way and issued set off. And predominantly, majority of these goods are manufactured by a company outside India, brought into India through its own related party company in India. Just for a ease of understanding, if it is going to be A Mobiles Limited of a particular company, let's say A Mobiles Ireland Limited or A Mobiles Thailand Limited, from that particular company I am going to import the product in India, and majority of them are going to be related party. Here again I had valuation issues. To overset all or to come out of all this, I used to do a model called as provisional assessment, and there is a process called as special valuation branch, and generally they will say you value your product, we will arrive one value, and special valuation branch will either increase the value, rarely reduce the value, regularly increase the value, arrive a value and fix it. Now the biggest challenge here was when we have to close this assessment. There were no timelines which were being set for all this, and very interesting note, we used to clear the goods through a triple duty bond, a 300% duty of the tax paid. So always the department is on a little very comfortable position when it comes to its tax liability. In this context, a new subsection is getting inserted, wherein which they come out and say the time limit is going to be 2 years from the day in which the provisional assessment order is passed. And let me repeat it, it is not something very, very regular, it will happen rare, and in case if it happens, now we are setting the time ball running. Same, in the same standards, a new subsection is also getting inserted in case if there are matters which are having litigation and they are pending at different level, be it at High Court or Supreme Court, or it is going to be at the tribunal level, or board has taken certain position in connection with its taxability, all the time zone will not be considered in the 2-year calculation. So once we conclude from that day, 2 year. So any case, this 2 year is a new time limit when it comes to this, nothing great beyond this particular amendment which is being discussed in clause 87 of the finance bill. Yet another new section that gets inserted. This is a next section after to section 18, next to provisional assessment. Section 18A is getting inserted. The purpose of this section is very simple, where today, whether we agree it or not, many times if there is a demand which is being proposed before an authority and the threat of arrest is simultaneously pushed, let me repeat it. If threat of arrest is simultaneously pushed, many times the assessee or the taxpayer pays the demand and clears it off. And whenever he pays the demand, he generally pays the demand under voluntary head. Now you can take some of the references from the Central CGST Act or SGST Act, or you can take for this matters in connection with DRI matters. I'll took one or two matters which are more directly connected towards this amendment. Anybody who is going to export rice, they are liable to pay an export duty of 20%. This was got introduced way back in August 23, mid of August 23, or sorry, mid of July 23. So anybody who is going to export those rices, they are liable to pay. And it is a settled principle across people who source rice from preferably all those countries which are located in, it could be Middle East countries or it is going to be any of the European countries. It's a settled principle. We have to give him a CIF price. Now my CIF price is 60 rupees, which means it includes my all transportation, loading, unloading, XYZ, followed by my export duty also, and then I will arrive something called as my FOB value. It is also the industry practice. Let me repeat, it is not an individual practice. It is an industry practice to reverse work this. Now I will do the reverse working. I will say of my value 10 rupees is towards transportation, and then I will arrive something called as my FOB value. Now before even arriving FOB value, I will do one more exclusion which is called as the 20% export duty. In other words, to make the whole discussion little simple for us, on 50 rupees, if I need to pay a 20% tax, I will arrive that tax and I will do a reverse working of that tax, and I would say for my convenience I will pick up a number something like this. 40 rupees is going to be my value of product, FOB value of product. I pay tax on this, which is going to be 8 rupees, and 12 rupees is my transportation cost. This is how I arrive 60 rupees or 58 rupees per kg, as the case may be, and export the product. Now department simply comes out and says, you have collected from the other person 60 rupees. Of this 60 rupees, I will exclude only transportation cost. Balance becomes your consideration, and on the consideration, which includes what? The export duty. On that export duty, you have to pay 20%. Let me repeat, if we discuss with per kg, this will not be a big number. If somebody who has exported 110 containers, which is approximately equal to somewhere around more than 60-70,000 of metric ton, in 6 months, his demand will run into a size of closely to 9 crore to 12 crore, which he has not even made it as a gross profit. Now here, who steps in? The DRI steps in. And what threat I have? I have the threat of arrest. One, if someone is going to discuss on this road, no, Mr. Ganesh, I don't have a client who deal with rice at all. Thank you. Definitely all of us will have a client who is importing goods from a foreign country. Now let me repeat, import, what challenge here you have? Honestly, I don't have any challenge. Goods comes in, I pay the money, and the goods get cleared through the bill of entry. Now 3 months later, DRI comes and steps into my office and says, your goods is origin of China, not origin of Sri Lanka. Unfortunately, I am sorry, I have a certificate which is issued by Sri Lankan Chamber of Commerce, withholding the name of the chamber. I have the reputed, it's not XYZ Chamber of Commerce, a very reputed Chamber of Commerce, which says which serves as a source for my certificate of origin, and based on which I have already cleared some 27 containers of particular photographic equipments. Now photographic plates, pattas, all this. Now I have been another 8 or 10 consignments which is pending. It's always a business which goes on upfront 50% advance, and the balance 50% has to be paid before I clear the goods. In a model like this, if DIR comes out and question my just the origin of my goods, I am put into doldrums, where he simply says, this is not Sri Lankan origin itself. That fellow has imported from China to Sri Lanka and then shipping it, just ships it to you from Sri Lanka to India. I am sorry. See, when somebody is at DRI Delhi and they are summoned by the DRI, and from morning 7:30 to evening 6:30 he has been waited and questioned, and at evening 6:30 he is being slapped with a calculation like this and says you have to pay 18 crore rupees because of the product is liable for anti-dumping duty of 10%. That is where not the problem stops. I have to pay that, let me pay anti-dumping duty. The problem is the moment I agree for this anti-dumping duty, my value for IGST will go for a toss. My IGST, value of IGST, that is basic value of the goods, plus the customs value and the customs duties such as the surcharge, or it is going to be the the social welfare surcharge or those health cesses or whatever I pay, plus anti-dumping duty is the value for IGST, which means I will not be liable to pay only anti-dumping duty and interest. I will also be forced to pay the IGST and its interest. Now, here comes the next supplementary question. Okay, I will pay IGST on this 18 crores. 4 crores is what? This IGST. I will pay and take credit. No. Already one fellow is waiting under section 17 to block this ITC. Let me repeat it. Now, these are all some of the newer challenges that if the organization agree and they pay, okay, we want to drop it. In case if the organization has to want to revisit its classification, and let me behind it, over the last 3 years we are behind a particular air cargo office just to amend the bill of entry under section 149. So that if you amend the bill of entry under 149, I'll be entitled for a 1.5 crore rupee of IGST. Unfortunately, how much ever I can stand before the podium and say the mapping of 2A versus 3B is applicable only for all the B2B transaction which happens in domestic and not applicable to IGST. The practice and the hardcore reality is something different. Coming back here, on that all context, a voluntary payment is a new breed. They come up and say a standard time limit will be given. Later on it has to get notified through the rule what will be the time limit, and within that time limit assessee has the ability. Now it could be ink, it could be all those product. We will be facing some of these challenges. In those circumstances, yes, maybe section 18A would be of different help in case if somebody want to pay the taxes and move out of it. Coming back over here, more than 7 to 8 clauses goes and just discuss about the dilution of or the closure of the settlement commission and a new interim board of settlement or new interim board is going to be appointed under the Central Excise Act under section 31A, which will get introduced in connection with this. What is going to happen? All that I could able to foresee and appreciate it, everything is going to get consolidated to a single settlement commission board. As on date, though it is physically demarcated having different locations, maybe all will get crystallized to one board, and every application effective from 1/4/2025 will be filed only before the interim board, and any application that has been pending shall be transferred to the board on the 1st of April 2025. So settlement commission is going to be a common authority for both central excise and customs. And again, are they forcing something else beyond this is something we have to wait and watch how it is going to function and how things are going to move associated with it. Now broadly, these are all the changes in terms of the procedures in connection with it, and quickly touching upon in terms of the rate of tax. A larger rate reduction has been happened. In fact, in the schedule itself, majority of the goods which used to be taxed at 35% or it used to be taxed at 30% or 40% got its lesser rate reduction. However, there are certain exemptions which comes out and reduce the relevant rate of tax associated with it. Followed by a good welcoming move is given to electronic vehicles. Majority of the product, it could be the lead, it could be the cobalt, it is going to be any lithium based product or anything to do with manufacturing of lithium products, manufacturing of batteries in connection with it. Majority of them, the rate of tax has been reduced, and associated social welfare surcharges, everything get reduced, but majority of those rate are going to be effective from 1st of May 2025, by the time in which the proposed bill should get its assent from the President. Quickly getting into some of the GST related amendments. Honestly, be with me, majority of these amendments that we are going to discuss are already known to us, but its placement alone are going to be little different. Last year extensively they have already amended a section or a particular section called as section 20, which discuss about input service distributor. A few missed out points are there which got their attention and which is going to be applicable more effectively from this particular financial year. For that purpose, a detailed amendment is being stepped in connection with those input service distributor related amendment, followed by removal of time of supply in connection with voucher, or it is going to be the famous overturning of the words the plant or machinery or plant and machinery. Including this podium, I still remember, in fact, once this amendment is proposed, went and searched how many input tax credit presentation I did and how much of this input tax credit presentation I have emphasized that there is a difference between 17.5C clause and 17.5D clause. 17.5C clause used to have plant and machinery, 17.5D clause used to have plant or machinery. So it is in fact below to 17.5D there will be an explanation. The explanation will say plant and machinery. So the explanation is applicable only to 17.5C and not to 17.5D. All this argued from 2018. Unfortunately, it is also equally argued before one of the very famous decision which all of us know, Safari Retreat, left, right, center, and in fact they went and quoted that no, this is a drafting error. In fact, now also it has been agreed that this is a drafting error and there is an explanation that gets adds and associated aspects of it, followed by some amendments in credit note which need to be discussed in detail, and then introduction of invoice management system. Actually it is not invoice management system, wordings will be there, but those amendments which will again touch upon on the invoiced management system, and reduction in pre-deposit of penalty, introduction of a new scheme or a mechanism called as track and trace mechanism, and then a discussion about a particular aspects which discuss about supply of goods or supply of warehouse goods from the FTDWZ, Free Trade Warehousing Zone. Quickly, let me get into the relevant clauses. To start with, on the amendments, 160. A new section gets introduced where they simply come out and say section 2 subsection 61 will define about the term called as input service distributor. Don't be bothered about it much. And again, all they come out and highlight is they want to add two particular words, where section 9, after the word section 9 subsection 3 and section 9 subsection 4, they want to add two more subsection, which is going to be section 5 subsection 3 and section 5 subsection 4. Mr. Ganesh, what is both of these section? Nothing. Reverse charge mechanism of interstate supply. In the earlier definition, it included only tax paid under forward charge mechanism, intrastate supply RCM of regular RCM on any of these services, or it is going to be intrastate supply under 9 subsection 4. Now, why all these discussion? Why so much hangama in connection with all this? for which definitely I have to go back to section 20, which is the section which is going to be really spoil your interest on GST. This is the spoiler. Why this is a spoiler? Why you are calling it like this? All along, when I have to distribute my ITC, when I have to do something called as cross charge. The best part is this word, how much ever we search in the GST law, 174 section, not even in any section we will come across this word called as cross charge. But everybody will say cross charge, cross charge, cross charge. Now what are we trying to discuss over here? There is a head office. That head office also has few branches. Mr. Ganesh, I don't have a client who does not have a branch office at all. He has only one GST in Tamil Nadu or one GST in Karnataka, one GST in Andhra Pradesh. That is how my client structure is. Your life will be beautiful, peaceful. I'll definitely subscribe to that word, sir. I don't have a second thought at all. Okay, because many confusions will not be there. Some of us know blessed souls. We are all blessed souls. Why you are blessed souls? We will have a small client, not doing a very great turnover. He does a turnover of 6.75 crores, but has registration in 13 states. Okay. And on top of all this, we are the statutory auditor for it. Now, starting here, having 13 states registration, is it challenging? No. 13 state registration, he manages, he filed GST return, that and all is okay. I am no way connected. But there are something called as, he source from third parties. I am very clear in my words. He source from third parties few services. On top of it, first, something to do with software tool. Head office pays for it. And this head office sourced its software, and this software is used across board by all 13 companies. Now, all along what we do nothing. All along we understand there is a cross charge. This learning comes over 5-6 years. Oh Ganesh, cross charge need to be done, na? Then you are in a different zone. Okay. Now, no, I understand. Oh, there is some services that need to be done. Head office does to branch office. I agree. So we do a cross charge. We arrive a cost, add a markup, we do it. Good. Will it anyway help me? Yes, it will help you, and you can do. No, already I am doing a stock transfer, and that stock transfer cost includes this. Who told? I told. Today I say. See, I am not joking. I'm very serious. I am very, very serious on my point. People who are already having goods, I think you no need to cross charge it additionally once more again. Already your product has. And you can always take shelter under Rule 28, which valuation provisions helps you. But somebody who is into the service sector and they are not used to this practice, preferably a software company, a company which provides software as a services, who is into the operations of delivering content through e-commerce operation, or it is going to be somebody who is in the media business, somebody who takes care of people will come and speak in a language that generally we will not understand. All this Gen Z kids come up with a Gen Alpha ideas, not even Gen Z idea. He'll come out and say with a Gen Alpha idea, the next generation idea. When he come out and say, no, I'll create the content, okay, I'll upload that content, okay, people will use that content, I'll be paid out of it. If for content using and all you will collect money, and people will pay for it, I'm sorry, I have at least pulled few fellows legs like this, and everybody today doing good business in terms of revenues. And is it possible? Yes, it is possible. Now my discussion here is, in all these organizations there are going to be common expenses. I am at this juncture, I am not pitching into will it the CFO cost need to be transferred, will it the CEO cost need to be transferred. These are all age old questions. Forget and park it for a minute. There are real costs which are there are real services which are sourced from third parties, and this third party services need to be distributed. Now this distribution should happen through ISD. For this, an amendment which they have proposed. Earlier it used to include only reverse charge of intrastate supply, interstate supply. Suddenly from the sleep they wakened and analyzed, hey, I left what? interstate supply reverse charge. Now that interstate supply need to be added, and accordingly it should also be distributed effective from 1/4/25. This challenge is going to be one of the important challenge. Organization service level, let me repeat it, service level need to be identify whether this particular service, do I need to do a cross charge or otherwise. In case if I need to do a cross charge, then their section 20 will mandate, as per section 24 you have to mandatorily obtain registration. Now for one bill, do I need to do a cross charge? Two options I will give. Option 1, what? Any guesses? Don't take credit. Then I no need to do what? This cross charge at all. I mean ISD at all, transfer at all. No, I want to take credit on my statutory audit fee. I'm sorry, why I'm again and again on statutory audit fee is, this is one thing that cannot be what? Distributed. This is one thing cannot be cross charged. It has to be only what? Distributed. I should have an IST. I'm sorry, licenses also somehow I'll call the vendor, I'll say I'll sign one primary agreement or umbrella agreement, then I'll ask every branch to sign up for so many licenses, you bill them. Many things we are trying. I'll take one complete insurance. Every employee wise, how much insurance you receive, you bill all my vendor. At times, if your negotiation power of the organization is very high, all this is done. But at times the organization is a very small organization where the service provider has an upper hand. Then the service provider simply says, 5 bills and all I cannot raise. My processing cost of your order is higher, so I will raise only 1 bill to your head office. You do whatever you want. Now it could be health. Now health insurance and all, Mr. Ganesh, I am not taking credit. I am not saying you are taking credit. Where I did, you are taking credit. But this is a common service across pan India of all your employees. Then one portion of ITC to be reversed in the respective states. That is why IST. Please appreciate it. This provisions has a larger ramification. Days ahead will test us in terms of its implication. But in any case, my intention is not to frighten you. Please be aware. All along we had one format. We simply used to say ISD or cross charge. Today I am very clear. ISD is different, cross charge is different. When I provide a service from the head office to branch, then I will do a cross charge. When I source a service and that service is used by my branch office, first of all I am not supplying the service. In that circumstance, it cannot be a cross charge. It has to get distributed to the respective branches through a ISD registration. Quickly coming back towards a next clause which discuss about the amendment that are getting proposed in section 12 and 13. Now why this section? Section 12 talks about time of supply of voucher. Same section, supply of voucher for goods and time of supply of voucher for services. Nothing great about it. Both talks about like how invoice has to be issued or money received of this to whichever is earlier. Similarly, in case of voucher, what is your time of supply? This was there, and it used to be simply say all along that the day in which the supply is identified, that will become time of supply. A very important and a pertinent question came, when time of supply is identified or how to identify time of supply. We have a authority of advance ruling filed by a jewelry firm in Tamil Nadu, and that they got a against decision. Then the matter went up to the appellate authority of advance ruling. Again they got against decision, though, so they filed a writ before the Madras High Court, and in Madras High Court came out and told no, these are all payment instruments. Up to 10,000 rupees under the Payment Processing Act, we have the payment instrument. This payment instrument, you cannot equate it with goods being identified. Let me repeat it. If a shopper, just I am identifying this as an example, if a particular store sells its gift voucher and it allows the other person who is a holder of the gift voucher to redeem it across the goods, I am sure all of us in this room will agree, the supply is not identified. To the contrary, If at the time of issue of voucher, if I say only this product can be bought, then supply is identified. This was the simplest rule. If the same voucher is sold by a jewelry showroom, where they are very clear, against this you can buy any jewelry across any of my store in India. See, that is something very interesting. Not only in this particular state, across any of the jewelry store that I have in India, you can go and redeem this voucher. Now here a small issue came up. But in your store itself you have only one goods called as what? Precious metal. Now you are liable to pay GST. Now to put an end to all this discussion, they have a very elaborate circular, very recently issued. Now they decided this is unnecessarily creating confusion. So let's omit this provision itself. If I have this provision only, it is creating issues. Let me omit it. Now what will be the status quo of the voucher? The status quo of the voucher remains same, that it is neither supply of goods nor supply of service if it is not identified. Let me repeat. If supply is not identified, and how am I going to determine that? We have a Karnataka High Court decision and the Madras High Court decision, which both together combined in a very particular circular, where they have clearly highlighted these are the facts. If you have not identified the supply, then it will not be covered. So considering that, this exclusion has happened. The master explanation, which all of us eagerly waiting for, the plant and machinery, the plant or machinery saga comes to an end to plant and machinery. When I go back and trace down, at least 18 to 19 presentations I have submitted, explained this word, that to post safari retreat, we still had hope. No, go read this. If you read it like this, it will have its own plus or minuses. Then at times when I had some difficulty in understanding the subject or understanding the people around me, often I go back and sit with my senior partner. This is my habit. Not today. Earlier he was my principal. Today he is my senior partner. And I have this habit. When I went and told before him, see, I feel very ashamed. I myself have about 24 videos where I am explaining this in detail for more than 30 minutes, 40 minutes and all. And this is plant and machinery, plant or machinery. So plant or machinery, you can claim credit. This is how the credit availability is possible, all that stuff. And I'm somehow finding it not very comfortable. This happens like this. At that time my senior partner told, but majority of the people, learned senior members will appreciate. Ganesh, if you do business in India, you have to always ensure there is a big daddy. Everything will operate as per the wills of the big daddy. Now, then I asked, who is that big daddy? Government. Now, please go back, understand. He decided that he will not give you credit. Then, how much ever you go and try and interpret, no, this is this, this is that, this is this. At one point in time, on one stroke, you are not in Australia, Ganesh. Please understand. Now, I again ask, why you are referring to Australia? In Australia, you cannot go and make a retrospective amendment. Here, if I may be permitted, I will go and make a retrospective amendment from 1944. Forget 2017. Now, why all this discussion becomes relevant? Safari retreat, is it not anymore a valid reason? No, good decision. 96 page, worth reading. Somebody to aram say, read, understand, learn various concepts, all worth it. Bas, am I entitled to claim credit or not? We are now proposing a new test called as functionality test. Now, what is this test? We have to try. Then only we will know. Now, if the building is eligible for its functionality test, then yes, I will be entitled to claim credit. If the building is not entitled for its functionality test, I would not be entitled to claim credit. At this moment, be with me for just 2 minutes. Somebody who has practiced this law, somebody who know what was ModVat, from ModVat how it came to SENVAT, that SENVAT saga from 2004 when excise and service tax came together. From there, if you have been monitoring this, when 2004 excise and service tax came together for the first time, I know by myself some of the OMR buildings who constructed on their own, sourced the steel and TMT bars from the manufacturer, claimed excise duty credit, set it off with their service tax liability. This all got stopped through an amendment which they made in Finance Act 2010, which got effective from 2011. Now, why you are referring here? Here still scope for is there. If somebody is going to be very, very highly litigious, because often I am fond of this one fellow company, we all will be having this ocean freight, we have one decision. Yes or no? Can you able to recollect the decision? Yeah? Mohit Minerals. I often highly, very fond of that Mohit Minerals company as such and CFO precisely. What a aggressive guy. 16 writ petitions before the Gujarat High Court. And of the 16 writ petition, 14 writ petition, he only won. Okay. Now, why Mohit Minerals? If somebody is going to be so aggressive, okay, take credit, I am with you. I am not joking, I am with you. No, how I can get satisfied by myself? Go, still section 17(5), when it blocks, it allows own use of goods. Now, what is own use is again, as long as I should now prove own use with functionality test. If I could able to prove this, yes, ITC is possible. Else, we have ensured 2011 amendment. And see, let me repeat it. Once a provision like this is there, everybody will negate. See, whether somebody read the agreement, somebody knows what is own use, which is described in para 32 of the Safari Retreat or not, somebody who understand functionality test or not, simply they will say what? Boss, you are not entitled for ITC. If I am going to be a dubbing theatre or a dubbing studio, then I cannot call that particular dubbing studio as like any other person building, because I take from the respective owner the shell. Just I am not very sure how many of you all will appreciate shell. In case if you find it difficult, I often refer a shell house as Alai Paide house. We have to go back to the retros and understand one the pair will be living on one uncompleted non-plastered house. From there he will buy, and then he will start his acoustics activities, soundproofing, this, that, everything. And now here my building is plant or machinery. I'll place on record here. This is something which need to be interpreted, and I am of a view this is more of a plant and it cannot be machinery. And if my memory serves me right, we have under income tax Anand Theatre decision which will be little helpful to us. This endorse that thought that yes, this is because every hour you spend on the dubbing theatre along with the edit in the edit shoot, that is my money, and that is used for my further supply, and I'll be entitled to claim credit. So it is no more that vanilla understanding which is going to help, or little technical aspects associated with it. Quickly getting into section 34, which talked about the credit note. With due respect, by this time all of you would have gauged that credit note is one nuisance in GST. Honestly, whether it is credit note issued or credit note received, because the accounting credit note debit note and the GST credit note debit note are two different avatars, and that too with the GST effect, without GST effect, that will make life more beautiful. And here I want to place on record only one thing. I have received I have supplied the goods. After supply of goods, the other fellow has rejected the goods. Now, because he has rejected the goods, and today e-invoicing is mandatory, I have supplied the goods, goods went, the goods reached, then again it comes back. I have the trial of the e-way bill as an inward movement I put. When I do all this, gone are those days, tear that old bill, put one more bill and send. No, everything. I have left a beautiful trial in the system. formally I can close now is only model is I have to issue a credit note, again an e-credit note to this gentleman, referring the inward e-waybill if the value of goods is going to be more than 50,000 or 1 lakh, as the case may be in this connection. Already for a non-fructified sale, please be with me, already for a non-fructified sale, this activity itself a tiresome activity. On top of it, I should also ensure after end of that month that fellow has what? Not claimed ITC. Idallam too much. I'm sorry. See, some mechanism, with, pardon my French here, I cannot resist myself. You have to pardon my French here. Our வீட்டு குழாலெல்லாம் தண்ணி வரலன்னு என்ன அடிக்கூடாது. Sir, today I am groomed to certain levels. If on receipt of goods I am entitled to credit, on receipt of entry, okay, all nuisance I agree. Now, why this is, please be with me. Already section 15 subsection 3, which talks about the valuation, in clause B, there will be a proviso which will say, in case of a discount given post supply, again let me be repeated, post supply discount, you should ensure the other party has reversed the credit, only then you can adjust the amount, which was applicable for a post supply discount. Post supply discount means it might happen, it might not happen. Now here, boss, it has already happened. I have supplied and he has reversed. No, he has not reversed. அவரு சட்டையை போய் பிடிங்க, எல்லாமே என்கிட்டயே வந்தா. Now, any case, I'm sorry, we now have proviso getting inserted saying that if you supply goods to a registered person, then that person has, you have issued a credit note, that person should give you a confirmation. Will anybody will give? I'm sorry. No, practically not. The best part is for section 34, now itself officer is insisting for all this. இனிமேல்ட்டு தான் ப்ரொவிஷனே வர போகிறது, எங்கால் இப்போவே கேட்குறான். Okay, no sir, you get a certificate sir from a chartered accountant. Please understand, how a chartered accountant will give a certificate, that fellow has what? Reverse the credit, unless otherwise he sees the book. Even for a, I'll also assume, even a chartered accountant gives a certificate. Let me repeat it. You see a number in GSTR 3B 35,000. This 35,000 is only that 35,000. How you will know? Even worst case, you might be finding it me little weird, but even in that case, this 35,000. See, with 135,000 for everything I will say rule 42, 35,000. 17, sir, 35,000. Sir, credit note reversal, sir, 35,000. And very intelligently you will put that 35,000 in others. Why others? யார் கேட்டாலும் சொல்லிக்கலாம், 17.5 நாளும் சொல்லிக்கலாம், 32 நாளும் சொல்லிக்கலாம், more than 180 days payment நாளும் சொல்லிக்கலாம், இல்லை இது மாதிரி credit note நாளும் சொல்லிக்கலாம். See, let me repeat it. Those are the newer challenges that we are going to face at the procedural. See, this is all at a little higher intellectual level discussion is okay, but I'm sorry, at a very procedural level and grassroots level, it will have its own ramifications associated with it. And all the story saga completed now for registered person. Now let me come back to unregistered person. Now for that unregistered person, he should have not passed on the incidence of tax. Boss, our credit edukka kudadu. He has not passed on the incident of tax. Now how am I going to prove? You take certificate from him. Sir, with due respect, pardon me, the profile which is written by me, will I speak all about my negatives and write a profile and give it to him to read it out? In the same fashion, how somebody will say, no, I have not transferred, I have not reversed. How somebody will say? In any case, those are all that fun times we have. The next 3 years of compliance, which is going to make more interesting. Not only that, we have something called as IMS, Invoice Management System, hard locking of GST, all these are all new jargons, hard lock, soft lock, amendment lock. with due respect. Now, day before yesterday, if my memory serves me right, GST and told, no, January we will not do hard lock. We will do April hard lock. When invoice management system came, everybody told invoice management system, this is that you have to accept. Power engappa irukku? Where is the power to do all this? You are asking, no? Come be with me. Section 23 gets amended, wherein which earlier it used to say the return has to be filed within such time. That's all. Now, within such time, subject to such conditions and restrictions as may be prescribed. 39 subsection 1, which gives powers to file GSTR 3B, earlier just had one line, the return has to be filed within such time. Now uses a phrase, within such manner, such time, such conditions as may be prescribed. Now Rule 60 will get its amendment, because Rule 60 will discuss about GSTR 3B. Now GSTR 3B will get an amendment. If you comply with IMS only, we will do. Now, invoice management system, it has its own plus, it has its own minuses. I am not here to stand. That itself is one area for deliberation. But with due respect, people who are all pursuing compliance practice, ensure you are in always touch with a nice general physician who is good in diabetic and hypertension. Okay, because already I am facing something else. Between 11th to 20th, if any of my team members share permission, share leave, this that, and the most shivering month for me is always January. Thank God this time site didn't work. 3-4 days this side, that side we borrowed, begged, steel did completed. Otherwise, now why? It has its own challenges. It's not as easy as we see. I'm sorry. And we know how systems work. I'm not finding fault. I'm not finding complaint. Today, do we have challenges? Yes, we have challenges. It is a summary number reported. All that I agree. I'm not for it. I'm not saying the system not to be implemented. You implement it. But at some phases, all of a go, everybody has to come and comply with IMS means maybe today reasonably e-invoice is successful. Why reasonably e-invoice is successful? It got implemented in a phased manner. It got implemented in this country for 3 years, and till now they have not extended it to people whose turnover are going to be less than 10 crore rupees. I'm sorry, 5 crore rupees. I'm sorry. Now, why that? Because my bulk of my assessee is there. If I'm going to implement, that will create a real challenge to the grassroots levels, people who comply. Now, point that I want to drive home is, with all this itself, you are questioning me, this is not matching with that, that is not matching with this and that is together is not. Just because me being a chartered accountant and practice this law and I'm good at reconciliation, he thought everything we will reconcile and give. Now, why e-invoice, e-way bill, outward supply, and his e-way bill, your inward supply, all these are not matching? Sir, first of all these are not same. All this is different. Now, in this context, power for IMS is restored in section 39, and to treat IMS as a statement, section 38 is getting its amendment, where it is no more not called as auto-generated statement. It has to be called as a statement. See, somehow people want to implement certain things. GSTR 1 will be filed, 2 data will come automatically, and then you will accept, then GSTR 3B is automatically filed. This is what they taught to me in 2016. Maybe 50 meters from here, when for the first time GSTN came out and had an all India conference, a few selected representatives and nominees from the corporate all were being briefed. A valid question was asked by one of the construction companies which belongs to this particular state. They simply asked the respective advisor who has been advising, sir, we used to receive an advance, and this advance will get adjusted over the period of contract. This is called as a mobilization advance, and we will adjust over the complete period of contract, and the period of contract is 36 months. You are talking of you will receive advance, that advance will get reported, there will be auto generated number will come, and that number when you raise invoice will get adjusted. Sir, this mobilization advance which I receive, I will adjust this mobilization advance across my 36 invoices that I am going to raise. In fact, that was the day where they said automatic generation of numbers and all will not happen. Otherwise that would have been there. See, life will be more critical. Now here somehow they wanted to implement. They felt they have missed this intentionally. In any case, let them implement, but necessary amendments associated in connection with that has been inserted. Quickly on to the last two interesting amendments. One in terms of the penalty, where currently section 107 comes out and highlights 107 subsection 6 in its proviso comes out and highlights 25% penalty shall be payable in case of all section 129 cases, basically e-waybill cases. First of all, in e-waybill case I have been asked to pay the full money. Where is the question of 25% penalty? Sir, 25% I will pay. If you don't pay, I will not release your goods. Then you come, you fight, you do whatever you want, that and all is different. In any case, that is there. But now that proviso gets dropped and a new proviso gets inserted where they simply say, if in a order only penalty is levied. Now this takes us to something very new, where it is going to be a bill trading transaction, and in a bill trading transaction, not the lead person, the beneficiaries of the bill trading transactions are levied with penalty under section 122. In that circumstances, erstwhile in the earlier period, we used to file an appeal without even paying anything. Now it has to be paid amount of 10%. I think one more amendment we will expect very soon. In the normal situation, we have a upper limit of payment of 20 crores. Everybody will get excited if somebody receives a show cause notice for 25,000 crores or order for 25,000 crores. But it is not 10% of 25,000 crore. I am going to have an upper limit of my payment of taxes. In the same fashion, in connection with this penalty, that is not there, which will come over a period of time. Similar amendment is also been made in section 112, which discuss about an appeal filed before the appellate tribunal, which is another additional 10% of it. Post discussions in connection with this, a new mechanism is introduced, track and trace mechanism. I know some of the senior veterans who are all sitting here who used to practice excise law meticulously, and my own personal mentor Purushothaman sir, CA Purushothaman sir, who used to teach me how to read a notification. Today I can make a presentation where he has been sitting. I am cherishing that moment, but I only know in 2011 how to read a notification, where to read line by line. You should read, Ganesh, which section, which from which day it has been effective. You can read it only the top, because see, naturally that age, when we see, I will go to the center of the notification. First two paragraph and all, that and all they wrote for themselves, not for us. Now, why I want to press all this discussion here is, people who are aware of central excise law, they all know there is something called as a officer certification. In fact, the invoice will be taken from a particular location, products will be identified, the assessee will prepare the invoice, central excise officer will come, verify it, and then the goods will be sent for. That is basically called as pre-authentication of invoice. They continued it even for some of the EOU units and SEZ units. Even now this has been there in a different form when it comes to, see, in the CGST Act for all this cigarettes, pan masala, gutka, which in spite of whatever government does, this fellow evade. I am putting my best effort. In spite of that, he will identify one point and he will evade the tax. Now, I am not on all this. Like this, they have identified 12 products. Among the 96,000 crores of DGGI's cases that are being filed, of 1,400 cases, 96,000 crores approx is the number, and 1,400 cases. Of 1,400 cases, more than 700 cases are pertaining to iron, steel and alloys. Now already that is why we have this TDS on scrap. You have to sell only to registered vendor. You have to deduct TDS. My margin itself will not be 1% in a wholesale trade. Now I am forced to deduct 1%, and that too I have to pay it by what? Cash. That money will be lying with this. Now when I am going to get refund, God only knows. Now park for a minute all this discussion. Now they are going to come up with a new scheme where how it is going to be, it has to be part and parcel of the product or consignment. It is for the goods, it is for a class of person, all these are all pending. Only the fine print of this mechanism, something like e-invoicing. Now here I have a 64-digit hash. I will come up now with a 128-digit hash. Now our fellow will identify one break rule for this also. He is jailbreaking Apple 16 Pro, where they come out and say has the highest encryption. Somebody buys at AT&T there, signs up and comes back here, the same phone exactly gets jailbreaked, and it is operating on India's Jio SIM. Our fellow is smart enough to do all this. That is why you recognized and said we will have some 50,000 or 60,000 new education institution based activities, so that tomorrow, like how we have the new like chat GPT, we have this deep seek got introduced. Likewise India will also introduce one more GPT for the purpose of the whole world. I am not finding fault. All that I want to drive home here is this is one more mechanism which is going to be, see, looking everybody from a colored eye. I have my own perspectives of it, but any case, this is when it is going to come. See, it will not be applicable for every trade. My gut feel, it's my prediction and my gut feel, this would be definitely applicable for iron and steel alloys, definitely for gold and precious metals. Next it would be applicable for two products that I foresee is electrical, electronics and wood. Target would be on somewhere these 5 goods. Forget pan masala, forget gutka, forget tobacco, forget this, that and all. Any case, that fellow are already into their surveillance. He'll come and add us this in this surveillance also. You should do this also, you should do this also, you should do that also. See, I should comply everything. You should comply everything and this also. I am not very sure if you have some of the clients who are all dealing with this departmental store cigarettes. In cigarettes, there is a cess. That cess is in 2 components. One is a value addition, one is number of 1,000 cigarette cess. Now, unfortunately, the client who takes credit, they will not know that that number of 1,000 cigarette cess is a constant cess. It will not move as my supply chain increase. Irrespective, 4,000 rupees per 1,000 cigarette if I have to pay across supply chain, 4,000 rupees, and it is already discharged by manufacturer. Some of my retailers who does ITC fail to take this. Nothing great. 1.25 crores is the demand only on cess, which is technically I have to avail and what? Adjust it. I have neither availed, I have nor what? Adjust. Now, this is the challenge when it comes to some dealing in some of these goods. But in any case, you can ask me simply, Mr. Ganesh, what he has did? Simple. He has closed that GST and took another GST and doing business. He is very clear. He waited for some schemes like this. Once schemes come, we will close it. Now, broadly, those are all the amendments. And last but not the least, the FTDWZ, Free Trade Warehousing Zone. This is something very new. SEZ already there. It was a long time wish of majority of the trading firms, multinational trading firms, to import goods into India, do some small processing, sell it from India to some of the Asian countries, and then if they want, they can clear the goods to India. Now, why can't they do it in SEZ? They can do it in SEZ, I am not saying, but they should have some fixed establishment, the cost, everything is high. Now here what is the advantage? I take the warehousing space for just 3 months, do all this activity, pack up and conclude it. Now slowly this got little extending. Many times it is within the SEZ, this foreign trade, free trade warehousing zone is many times it is within SEZ. rarely they were out of SEZs. Goods supplied to SEZ is zero rated supply, but goods supplied to free trade warehousing zone, is it a zero rated supply, was a question that got raised, and later that goods got supplied to another aspect. A very detailed customs procedure is getting involved here. All that I want to highlight over here is simply by a stroke of an amendment, inserting it next to warehoused goods, like how people import the goods, store it in a warehouse and then sell to somebody else, from one warehouse to another warehouse, customs bonded warehouse, the goods moves. In the same fashion, they have concluded it simply, it will be neither a supply of goods nor a supply of service, because at the end, when the goods comes to India, it comes through a bill of entry route. If goods comes to India, if goods does not comes to India, then no issues. I have imported it, reprocessed it, and I have exported it out. I would be having a shipping bill and I will be sending the goods out. Now here, the only aspect is a few companies, a very, very few companies have received notices, a few companies failed to contest all this, and they, many times, again, sometimes people would be looking things from a dollar perspective. 8 lakh rupees here, plus interest, that's all. No, he says he will not levy penalty. 8 lakhs plus interest, if you convert all this, it comes only to what, 6,000 euros. Already I have approval for it, up to 10,000 euros in audit to close anything. You better pay and close it. Good, welcoming move. Let them pay and close it. If they paid and closed it, don't come back and claim from me refund. Whatever went into the elephant mouth will not come back. Government is a very big elephant mouth. They can take back all their aspects. These are all some of the prominent amendments that we have over here in connection with GST. Any questions, anything that requires deliberation, if you feel, yes, I would take it up. Otherwise, thank you all for effective and patient listening. Thank you.